They expect Brent to top $120 a barrel by the end of June, and WTI, that's our benchmark, to hit 117. Here to explain is Francisco Blanch. He's head of global commodity and derivatives research at Bank of America Securities. Francisco, it's great to see you again. So you think these calls are for the early to middle part of next year?
Yeah, no, I think look, the market is very, very tight. Inventories are at a very, very low point. Commercial inventories, that is. Demand is very strong, and we are not seeing much of a supply response, neither from OPEC nor from U.S. shale producers. So our view is the market keeps tightening, and you're going to have a race between gasoline and diesel demand going into the height of the driving season in the U.S. next summer that will put upward pressure on prices. Now, it may not last very long, but I think we're going to see continued upside pressure for at least the next 6 to 9 months.
And explain why you don't think it'll last very long, because if we look out for all of 2022, you think that, U.S. crude will be more like $75 a barrel. Is that right?
Yeah, we think on average, our forecast is $85 a barrel Brent and $82 a barrel WTI. So we actually think it's going to be high throughout the year. It's just that I think we're going to be at a point sometime next summer where prices are going to have to signal producers that we need to bring more barrels in, and they're going to have to signal consumers that something has to give, and they need to slow down in their petroleum purchases. So remember, prices in commodity markets are signals, and right now we need a signal to slow down demand in our view, because at the end of the day, much of what's going on today is related to the surge in global consumption we are seeing on the back of what's been the largest ever fiscal and monetary expansion in human history. That's all there is to it. And oil, in fact, has been the biggest laggard across the commodity complex, with pretty much every other commodity ripping ahead of oil in the last 12 to 15 months, really. So oil's actually been lagging here.
So how do you said that the key in the short term would be to send a signal that slows down demand. How do you do that? Who sends that signal?
The market does, and it's called price, right? The price will tell people, well, it's time to get back to buses. Remember, we've seen a huge increase in demand for private transportation, and mass transit has dropped quickly. We are also seeing the reopening of U.S. airspace to vaccinated travelers from abroad. Remember, next week, we're going to see a reopening of U.S. airspace. So I think at the end of the day, if you are injecting all this money in the economy, you're reopening your air travel, and you don't have the supply, then prices have to act and
so prices will be that signal. Prices will be that lever or that restraint that suppresses demand. So, but what I do hear you say is get ready for an expensive winter, folks.
Well, if the winter is cold, it's going to be pretty expensive. In fact, I mean, I've spoken to CNBC before about this, but there is a global energy crisis going on in Europe. There's a global energy crisis going on in China. So, I mean, is the U.S. has been somewhat insulated from these very high prices because the U.S. has plenty and abundant natural gas. Europe is paying the equivalent of $200 a barrel for gas right now, and European industry is pretty much in recession as a result. China had to reopen its coal mines and postpone its decarbonization efforts temporarily because of the surge in demand. Remember, the real issue here is that global exports are up 30% from pre-COVID levels. And by that, I mean, it's just we've created a lot of demand for things. And the economy is booming. That's a good thing, but you need a lot of thermal fuels to meet that demand. And maybe that's not such a great thing when you're trying to decarbonize.
Yeah, well, that's right. And we're going to have a discussion about decarbonization in just a moment. Francisco, thank you very much. A fascinating conversation and an interesting picture you paint. We appreciate it.